Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Wednesday, guys. We got some stuff going on here already, right at the beginning. Let's see here. You see them moving down there? We did have ADP this morning, didn't we? Let me come back here. Yes, US ADP employment change, 184,000 versus the expected 150. So it looks like that ADP number higher than expected, shoving the market, well, the treasury market in particular, down here pretty heavily this morning. We're back at 109.16. Remember that 24 was kind of like that. This is where momentum starts. We are still below that today. So I think that we could still get some pretty strong selling flows here. I might want to, you know what? I'm still really worried about taking it with a live trade because it's already gone so far. But here at 16, I think it might be able to kind of mess around. So I'll put an order there. Let's go and look at the charts. Okay. So here you can see the treasuries again at 24. Let me move that out of the way. 24, we are in momentum. They kind of came up to it and ended, you know, they weren't able to push above that. And then here we're getting shoved back down again. Below 14.5, we could start to pick up even more. Here's the S&P 500. Well, you know, a little bit of a bounce overnight, but you know, they're still only just getting into the top of their range from earlier. So from a technical perspective, they're not going to be too interested in that. You can see here, though, yesterday, actually a slightly unusual day. There was a lot of activity down here in the doldrums, as opposed to like all at the close. Probably equity traders buying the dip is my guess. Oil just continues to shove up. So now they are at 86. It's $1 at a time. That is aggressive movement. Okay, $1 in oil is a lot. This is turning into a real monster, a real problem over here, because we are to price levels where that's going to hurt people at the pump, right? Gold and silver. Well, gold and silver had a little bit of a decline. They're probably going to decline even more with this ADP, but they're still relatively high. Still doing pretty good. Copper's up a little bit. There was, I mean, this isn't China, but in, my goodness. There was an earthquake over in Asia, okay? I'm having a hard time remembering names of countries and stuff like that. Yes, it is a country. And then here, the Japanese yen. The Japanese yen dropping to new lows. That's not good. That's not good. And what about Bitcoin? Well, Bitcoin is still below 6,700, but it's not doing anything interesting yet. Maybe could sell a little bit more this session, though. Well, I did not get filled over here. I thought they'll probably mess with 16 a little bit, so let's see if I can get filled just above that. So far, no. So far, the answer is no. All right, so do we have anything at the bottom of the hour today? Well, we have Fed's Bostic speaking. Okay, so let's come in. CP template to today. Okay. Let me move my keyboard over to the middle so I can type super fast. ADP higher than expected. Treasuries still in momentum sell territory. Feds Bostic. Feds Bowman. ISM. Oh yeah, that's a big one. ISM services PMI. And do we have anything later? Oh wow, we've got Goolsby, Powell, Barr, Krugler. Lots of Fed speakers. I almost wrote lots of Feds. And then Taiwan earthquake. Taiwan earthquake. That is another flow. I don't know if that affect our market too much, but it is something that we should note. So flows are supposed to be things that here at the beginning of the session we're expecting to impact us. News and events are things that we would that happen during the session. Overall, I'm going to say this is probably mild to medium net sell, this information that we got. But it very much depends on what Bostic and Bowman say, right? Let's put that. But to start out, mild to medium net sell. I think that we've already seen about 15,000 contracts selling, which is about, 10 to 20 is about what I would expect to see based on that ADP. So I could sell it. I do want a good spot though. If they're not going to fill my sim order at 16.5, then I think that I'm just going to have to miss the train. Is that too picky? Probably is too picky. Do you know any good one order cancels the other strategies? So I mean, I wouldn't really call those like strategies. I mean, do you know how to set it up? So if I come over here and I bring up my in Jigsaw, I'll show you how to do it in Jigsaw. It's different in NinjaTrader. But here in Jigsaw, what I can do is I can say one order cancels the other. So like once I get in the position, I can say, here's my limit order that is my target, and here's my stop order that is my stop loss. And if I have the OCO button checked, then those orders that I put in will be one order cancels the other, which means that if one of those orders gets triggered, it will cancel the order on the other side. Now, why would you want to do that? Well, let's just say that you were going to take a trade during volatile news and you believe that you could see pretty wild volatility, right? You could see a situation where your target gets hit and then immediately it flips around and hits your stop, and then that stop stops you into a new position, right? And then maybe it turns on you again. That's why you would want to use an OCO kind of strategy, okay? Now, the way that you're asking me that question, though, there's been a bunch of like Forex firms and so forth kind of trying to push these like features Like, here's a feature that makes us unique, and they call it hedging, but it's kind of like a one order cancels the other sort of a setup in Forex. And so that's probably why you're kind of seeing that sort of a thing. But I wouldn't really call it like a strategy, you know? It's just a feature on orders that you can use. Yep, the hedging the same instrument thing, it makes no sense, but... Probably not what you want to hear, but I'm guessing that the reason that you're interested in it is because of marketing. It's nothing all that special. Let's see here, Brad. I am in the process of getting my Ninja Trader platform back up and running. Did they dump the desktop? I downloaded the latest version, and it always takes me to the web interface. No, they did not. So let me see if I can show you how to get to it. I'm surprised you don't try spread trading on Sim. Years of watching you, and you've never really... Well, there has been some points where we've messed around with the knob spread a little bit, haven't we? I think, though, the conclusion I keep coming to whenever I explore that is that trying to scalp with spreads does not really make a whole lot of sense for me with the commissions that I have. It makes a lot of sense to do spreads over here on the micro treasuries and really, and swing trade them. And I've tried that a few times. The last time that I tried it, I think I lost like $50 and I was a little sour about it. But I think that there are some strategies, some swing strategies with spreads that I could implement over here in the micro treasuries, and I just have not quite found the setup yet. Right? I think that I can do something there with momentum and everything, but I don't know. Okay, where did you learn this style of trading? I would say that it's been a long evolution, right? When I first started, I started with the No BS day trading course. That's like an $80 PDF that you can get with a bunch of videos that kind of show you how to set your DOM up. And so, for instance, I have ZB, ZN, NZF. That's the 30, 10, and 5-year treasury, and I have them all next to each other, and I'm kind of watching the order flow across all three of them to see if they all tick at the same time, and that those are things that I got from No BS day trading. But then over the years we continue to do research. I spend a lot of time reading empirical studies that you're going to get out of like the research community, like at universities and so forth. So I'll read those and try and implement that into our understanding of the market. That's where we come up with this thing that basically what we've discovered is that particularly on an intraday basis, orders have such a strong impact on price that really all that matters is what the future orders are going to be. This is what the flaw that I see in most retail trading is this idea that I'm going to use some past movement or pattern to predict what the next movement or pattern is going to be. And the problem is that these guys that come in and they have to buy or sell a ton of a thing, they aren't looking at that sort of stuff. And those things are completely disconnected from this pattern that you're going to see. That it's something that's so disconnected, that pattern doesn't matter. What matters is whether they're buying or selling that day. So we're trying to predict that. And this all comes from some empirical studies. The biggest one being the inelastic market hypothesis by Gabiax and Koichen. So if you want to read that, and I have a video about that on the channel, you can go and find it. It's like one of the last videos in my order flow video series. And so that's kind of where we've come to, we focus on flows. That also means, by the way, there's a pretty strong focus on news and breaking news and things like that, and understanding the global macroeconomic framework. some of that is you have to come in every day and just kind of do this exercise and say, okay, what are the flows that we expect? And then if we do see a strong flow that we didn't expect, we speculate on what causes it, and we kind of can, dig around and search for information until we have information that kind of confirms or rejects some of our hypotheses about what's causing it to move. And as you do that process every day, your mind, that's like training data for your mind. Your mind will pass it through a neural network and train the neural network with it, right? And then you'll come in one day and you'll hear on the news squawk, oh, X thing happened, and you'll immediately know, that means that they're going to sell. And so you sell it and you make money. And so it's a process. But there's not like one spot that you could go to read. I do have, if you go to speculatorseth.com/strategy.html, then there is a form there where you can sign up to get a PDF sent to you. Promise I won't spam you. I've actually never used the mailing list, but we are building out a mailing list. So sign up for that mailing list and it will send you a PDF. And it goes into a lot more detail about how I actually trade. Kind of like the strategy. And it's not presented as like, here's a strategy, I'm giving it to you. It's more like, here's all of the information that you kind of need to help you as you develop your own strategy. Yeah. I'm still thinking about the spread thing, and was that just kind of a random thought, or was there something that had kind of prompted you to think about the spreads this morning, Uzi? My issue has always been that, like, it seems to me that on a short-term basis, the spreads can be kind of hard to predict. Like on a really, really short granular basis, the spreads seem to be really hard to predict for me. Like right now, there does seem to be an overall steepening trend, but then, there will be small periods where it flattens a lot. And if I'm like, one or two ticks of flattening is, all I'm looking for, right? That can kill you real quick. Let's see, I was talking about spread trading with my wife yesterday when I was talking about markets going down despite metric tons of buying and why it's like that. It was just on the brain. Yeah. Well, I have found a couple of studies and information out there that suggests to me that there is a very strong time series momentum effects in spreads. So normally, if I'm doing like a momentum strategy, right? I want to have dozens, if not hundreds of futures that I'm performing this strategy across, and I'm going to do like a complicated correlation matrix analysis of all of the different instruments so that I have a portfolio of highly uncorrelated instruments. And then I'm going to trade my momentum signal every time that I get one of those momentum signals, because the way that it works is it's not predictive at all. But what it does do is it gets you in when momentum is starting. If it does end up being a momentum move, you're in on it. And you make so much on those momentum moves, because those momentum moves go hundreds of times further than the losers, essentially. And that's how you make money. But it only works if you're doing it across like a huge portfolio and you're holding it for a really long time and things like that. So for a retail trader, like carrying out that explicit strategy all the way isn't really practical. You don't have enough money, you don't have access to enough futures, that sort of a thing, right? But if there are really strong momentum effects in spreads themselves, then we could do a similar sort of a thing with these micro treasury yield futures, right? And we could watch all of the different there's 4 of these instruments. I don't have the 5-year up, but there's 4 of these instruments. So there's butterflies as well. So, if I could sort out, okay, here's all of the different spreads that you could take, and here is the momentum signal, right? And it would take some back testing and stuff like that. There's just more research and more work that needs to be done. But the idea is that then you have a smaller universe of stuff that you have to watch, and you have an instrument that is really, really small. So then maybe a momentum strategy of that sort might actually be practical. So I am interested in it, but other things going on right now. I see a dude who calls himself the spread professor. Wow, $3,000 package. Oh, that's funny. Well, I'll still try searching here. So coming in here to discussion, I'll just add on my own notes. Spread professor. I'll still look, even though I've already got some warning signs to like beware. But maybe there is some useful information in there. My mentor, John Bottomley, he told me this story that a long time ago, long before I came in on the scene, that there was this guy, and I think that he was talking like 2006, 2007 time frame. Could be wrong, but anyways, he told me this story of this guru, that there was this guru out there that was teaching spread trading. And this guy, he had this chat room that had thousands of retail traders, and they were all just trading the spread. And apparently, John said that it worked too. Like, he didn't make very much money, but he had these guys trading spreads that they made a little bit of money. And like, the setup where he made the money was like, they made so much from the commissions with the broker or something like that, right? And then, like, the 2008 crisis came along or whatever, and like, everybody in the room blew up. And the room disappeared after that. But so that was like, I've always wondered about that one, because it did seem to me like there was some like retail trader, let's say spread knowledge of some sort that was lost, And who knows? Maybe what they were doing was just taking on risk. Who knows? Because the thing that I do kind of see is like, if you come in here during a normal market, and I would say this is not a normal market, like with the yield curve inverted, and we're kind of a little bit into steepening momentum and things like that. It's not a very good time to do this, but maybe if we had a recession, let's just say that the easy thing for me to analyze, we have a recession, yields collapse again, the yield curve steepens all the way back up, and then they resolve that crisis, and we have a very clear like recovery sort of a thing, right? Then what you should see when you look at the spread, so remember, higher spread typically means steeper yield curve, okay? Right? So we're like down here. This is inverted. We're down in here. It comes back up. Then what you tend to see happen is it flattens. So what you can do is you can come in and you can just say, I'm going to go short the spread. I'm going to sell the front month and buy the long month in a flattener. And I'm going to have like really stupid close targets and have really wide stops and just make money scalping it like that. And during this whole period, that kind of works. Unless it spikes up, and then that's when you lose your shirt. Right. So if we can, understand what's going on and just avoid those, maybe you could make that work. I don't know. That site is useless unless you want to pay $7,500. That's crazy. Is there anyone better? Well, so go and watch my order flow series. Watch my order flow series. Check out the free PDF. I really feel like that is the basics of what you need to get started. Gary's, kind of a different thing. So you got to understand with Gary that he is teaching some very, very esoteric knowledge that is very much dying out, right? The robots took over the kind of like local, the institutional kind of local person that was market making doesn't really exist anymore. And he's the only person out there that is teaching people essentially how that sort of way of trading worked, right? So it's like the hardest way to trade. I've seen a couple of people that took his stuff and they're doing pretty okay with it, okay? But it's like the hardest way to trade. So I feel that Gary's course is really for somebody that has the discretionary income floating around and they really want to know about how that kind of a strategy works. Then Gary's course is for you, right? But for the average retail trader, and understand, the average retail trader is going to lose money. I would never encourage somebody to come over and start trading futures with the idea that they're going to make that a career or something like that. It's probably not going to work out, right? This is really for people that are just obsessed with the market, right? If you're the average retail guy, you have a little bit of discretionary income, a few $1,000s a year that you can put into this, and you just want to trade, then go and watch my videos, read that PDF, and then come in here and start doing what we do here every day. Look at what the flows that you expect to see, what kind of breaking news that you get, etc., and just learn as you go. And I think that gives you the best chance of being successful, at least in being able to continue to do your hobby, right? And I think that it puts you in a position for you to find a real strong edge. The markets are continually developing, and sometimes there might be a change that provides a big opportunity for you, and then you will be ready, you will know what's going on, and you will be able to take advantage of that change. If you're so lucky. If you're so lucky. Very difficult to find anyone experienced discuss lingerie spread trading. Okay. but Uzi says that's true. No one covers spread trading at all. It's true. The only information I have ever found on spread trading is, this is a steepener, this is a flattener. Flattener is you sell the front month and you buy the back month. Steepener is you buy the front month and you sell the back month. So you enter in this side, you enter in this side. That's all I've ever seen. Trading courses exist to take all the research capacity retail traders can muster and divert it into dipshit salesmen. Oh, that's an interesting take. I find that curious. Because it does seem to me, yeah, research is all you need to know. Everything else is just buying and selling. Yeah. It does seem to me that, there is so much retail trader effort wasted on just pointless things that make no sense at all, really, when you get into it. So I'm not going to respond to this guy until like long after the stream, because I know that I'll get like super absorbed into it, hyper focused on it, and not talk a whole lot as I try to craft the most perfect words. But there was this thread on Reddit last night, and this guy, he posted that he was really struggling and burning out, and maybe was taking a long break from trading, and he was trading the smart money concepts ICT way of doing things, and everybody was bashing him because of that, right? So he made a second thread that was basically like, why is there so much hate for this on Reddit now? Well, the reason there's so much hate for it is because there's just been way oversaturated. But I posted, okay, you want to know why we hate this so much? Exhibit A, OP, you, the person that posted this thread, you're burnt out of the trading. You haven't had success with it, and you're still a true believer. It's like when a battered wife tries to defend her husband that's been beating her every night. Oh, he's actually really a nice guy, guys. He has his problems, but you get over. He's really a nice guy. Why you defend him? He's beating you up every day, and you still want to. That's what these traders do. They come in. You got to understand, guys. It's all to do with how a brain develops. The front part of your brain, it's a neural network. You pass data into that neural network and it trains the network. If all you're doing every day is coming in and looking at chart patterns, that's what your neural network is training itself to do. Meanwhile, you could be training it on things that actually matter, like what is the breaking news? What is the macroeconomic framework? What are things that actually drive flows on a day trading basis? And trying to understand those. And meanwhile, you're wasting all that time on something that, as far as we can tell, just doesn't work and has absolutely no empirical evidence backing it up, right? But because you're training it all on that thing, like that's all you can see. That's because it's all you know. You've trained your brain to not see anything else. And so yes, when you start to struggle and it's like, this isn't working, the brain doesn't go, oh well, maybe everything that I know is wrong. No, it says I need to persevere because it's been trained on that thing. It doesn't know anything different. For us, I think that we have a framework that works pretty good. I'm not going to say that you're going to make tons of money with it because most retail traders are going to lose money, and I'm not giving you like an explicit strategy. You still have to develop your own strategy. I feel very strongly that this gives you the best fighting chance. Okay, but when I'm coming in and I'm trading, and I'm having a period where it's just not working, I don't come in and be like, oh, well, I just need to persevere, double down on whatever it is that I'm doing right. No, I say there's something about the market. Maybe it's something just specific to this specific market, but there's something that I don't understand and I need to figure out and change, or I'm going to keep losing. You've got to change. If you are training your brain to do research, to solve problems, to try and find things that nobody else has found yet, then it's a completely different game, right? I'll be the first to admit, nearly 16 years ago when I started this game, I had the same mindset. Thankfully, never paid anyone to tell me how to trade. Constant reevaluation of yourself and market conditions every day. Can't pay anyone to learn that. Yeah. That's exactly it, man. So yeah, it frustrates me so much that retail traders are kind of being funneled into this thing that I really think, holds them back. I really think it just takes them down the wrong path. They learn the wrong things. It frustrates the heck out of me. Because what I want to do is I want to learn about the market. I want to, see problems and solve things. And what I want is I want a community of people to collaborate with as we do that. Right? Because if you go to a big firm, you have like thousands of people behind you with all of this infrastructure and research and things to help you. In a retail trader, you're all by yourself. You got to have a community of people you can research together and find edge together and learn what the market is actually doing together. And most of the people that could potentially be helping us, some bright people that could maybe be good problem solvers, are instead getting funneled into this pipeline that basically makes them stupid traders. Yeah. It's not frustrating that they're funneled into that. That's to be expected. What's frustrating is how many retail traders don't want to leave that trap. Yeah. But, and that was kind of the point that I was trying to get to, though, is that it's hard to get out because of what you've done to your mind, essentially. Your mind is a living, developing thing that's constantly growing and changing and developing. Over time, it crystallizes. And the problem is that if you're crystallizing things that explicitly prevent you from being able to continually change and develop, then you have a real problem. And a lot of people do that. A lot of people, they don't keep that plasticity. That's interesting. We had a little bit of a push lower here. Some of these moves have been a little bit impulsive. I think that if I can get 16.5, I will take another contract. But it seems a little illiquid down in this area and a little jumpy. A team of people monitoring global economic developments throughout the day is 1,000 times more valuable than some dopey course. Yes. News about markets create change, not patterns. Yeah. Well, yeah, it's just that, like, some things aren't patterns, right? Some things are random. Like the news that comes through and like the timing of that, there is some randomness to it, right? So you can't go and look at the price and use that it's just not going to explain things. One of the other things on my list, let me come back over to here. We got this one. Yeah, right here. Is it this one? Trading _ to do. No, that's not it, actually. Oh, no. It's, there we go. Speculator Seth Projects. And I bet you it's probably down at the bottom here. Avoid news algo. I should probably have that pretty close to the top here. So one of the thoughts that I've had is, like, I think that news-driven moves, they will create such a large move that if you are, like, doing an algo, right, and you're trying to fit, do a little bit of optimization fitting on your model or whatever the deal is, right, that those kind moves from, like, ADP and non-farms and ISM, PMI and all that sort of stuff, are basically so strong that the fitting all happens to that and not actually to the things about the market that you're maybe trying to look to do. So if I can create a framework that allows me to more easily just avoid those time periods in my backtesting in NinjaTrader, I think that I could probably get some better algos. So I want to do that. To do that, I think that I need like a data source that will tell me the time, particularly, of like every big news event historically. And I'm just not familiar. Like I can go to like Forex Factory, right? I can go to Forex Factory and I can see what it is. I just need to find something that allows me to like query this programmatically. And I just haven't done enough. I think that it probably exists. I might need to do a little bit of digging, but that's kind of like what I'm looking for. And then I could do that. And that's something that I think I should be at the top of my list. Like if we had the organization to assign people specific information sources and funnel it to a central point where we form biases off that is so much more valuable. It's like trading rooms. Retailers, traders love that stuff. They want signal rooms now. A real trading room is people aggregating news and economic data and building a consensus and then trading that consensus. Exactly. So I've struggled, Uzi. Like I want to get the audience more involved in what we do on stream. And I want to kind of make the Discord a little bit more advanced, but I'm just not quite sure how to do that. Because, you know, the big issue is, like, with what we do online is that people come and go and so forth. So, like, you know, how do you sort out correct roles for people and you start relying on them, and how are they going to be reliable? And you know, it's just I'm sure that a more social person would maybe know how to do it. When I start to approach the question, it's like I'm just not sure what's the first thing that I would need to do to move in that direction. I'm not even sure what it is. I've run a live futures trading Zoom for free for a few times, and many retail folks would ruin the interactions with bad psychology attitudes practice. Well, yeah, one of the first issues, and I do kind of feel like that the first major obstacle is to get everybody on the same page about like what is the reality of the markets, right? Because when it's just an open thing, like you can see it in Discord, people will come in and they want to talk about price action, and it's like, well, what empirical evidence do you have about this price action thing that you're talking about has any kind of efficacy, or that the concept that you're talking about? See, in that thread that I was talking about, that Reddit thread, the guy kind of asked me, he was like, well, like, are you saying that there's no efficacy to this particular guru's methods at all? And you know, I would like to say, yeah, it's all complete junk, but the reality is actually way more complicated than that. Retail traders might be picking up on some behaviors in the market that are actually a thing, but like the details matter. And so it's kind of pointless to try and say, okay, here's this one person's framework, and now this thing is right and this thing is wrong and this thing is, because so much of it is wrong that it's way better to just come back and say, look, here is the empirical information that we have, and here and just go start from base one and get them on that pipeline instead. And then they would understand where their previous understanding was incorrect, right? It's like you basically need every individual to operate as a squawk. Beyond that, it's just divvying up who monitors what. I don't know. I mean, I kind of feel like that when I come in and I list these flows and I'm listening to Financial Juice, that gives us most of the information that we need. If, we're divvying things up, the sorts of things that I would like to be divvying up, it would be like, okay, here are all of these things that we need to do. Okay, you're in charge of the avoid news algo. You're going to go and do back testing of open interest on higher time frame strategies, and split the research out like that. That's one of the things that I would do if I had like employees, I've been looking for a historical news research tool. Was one a while ago. Lets you graph plot news history. Well, this does like let you see like what the values were and have that. But all I care about is there was ISM and it was at this time. So you're not in a position 1 minute before and after that. And I just need to be able to access it programmatically so that I can then generate a spreadsheet essentially with every major news item that you needed to have avoided in the past. It needs to be historical. Yeah, so how would you split them up, Uzi? Like let's just say that we've got like who do we got here today? Some of you guys here are a little bit new. Brian is a slightly newer name. But I'd say that there's about a dozen of us that are here like almost every day, right? What would we split them up as? I could split it up as like, I watch treasuries, you watch oil, you watch equities. That could be a thing. Do you do it by information source or by instrument? Okay, so this is another issue. I think that one of the biggest things holding us back right now is lack of a lot of good information sources, because my information sources, I try and go everywhere. The truth is that most places don't really give me a whole lot, but I'll have downtime, I'm browsing on board, whatever, I'll do it. But most of the good information that I get either comes from Financial Juice or Zero Hedge, right? I need more information. Like if I had access to, or still had access to, Goldman's research, right? Then I could come in and I could say to the team, okay, you're going to cover this one and you're going to read all the reports on this thing. You're going to read all the reports on this thing. And then, right? But right now we don't have a whole lot. FinHub API looks like it might do what you're looking for. Let's come back and put that in the notes. I have looked at them before, but I don't remember if I was looking at like historical news data stuff. I'm a little surprised that I got that big of a winner on that position, dude. Like, I kind of thought, oh, I can take one tick off. It'll probably kind of mess around in this area. If it spikes up to here, I can just bail. I thought maybe there was a chance to move, but like I was thinking like maybe it would come back down to like 13 half. Well, okay, I guess maybe it's, yeah, I guess it just looks bigger on a chart than I thought. But it's a pretty good runner there. I am kind of the opinion that things might be similar to yesterday, where the selling happens early and then kind of sputters out. Let me come back here because we've been talking a lot. I've been talking a lot. By the way, don't let me forget, I got something that I got to do at the top of the hour. There is a meeting I need to get on that I really care about. So that we want to show this application to a team. See what questions they have, anything that they might want to change about it. And last night I was going through and I found a bug. And so like I was like furiously typing, trying to solve this bug. And it was like a really complicated thing in TypeScript to fix. So I like spent all that effort. Don't want to forget and miss the chance to show it. What was I going to say? I had another thought. Oh, yeah. Guys, I tell you what. If you want to level up your life, take notes. Like if you're the kind of person like me that is just on their computer all day, just start writing everything down in a text editor in Markdown. It makes such a big difference. That is like, I feel like I am at a completely different level now that I'm writing all of this stuff down, and so I don't forget any of those things. And I come down at the end of the day and I can look at all those things, so don't miss anything anymore, and it makes a big difference. Then you're the person that keeps track of everything that's going on. That's really valuable. You've been using Notion? Oh, I think I've heard of that one. What is it? So for Markdown, the really popular one has been Obsidian. And like apparently Obsidian has a bunch of plugins and things like that, but I don't get it. I haven't seen a plugin or a use case for Obsidian. It makes these graphs. That's kind of cool. But I haven't seen the use case for Obsidian. And I kind of feel like I really like just using a text editor and writing it in Markdown and keeping track of all of it and saving it on myself, you know? But whatever. I also, one of the kind of the ideas, the themes that I've been thinking about and playing around with a lot lately is this. Take what you're doing every day, and you're going to have different things. You're going to have different jobs and different hobbies, right? But deconstruct those jobs and hobbies down into like their most basic level, especially if you can get it down to like its most basic mechanical level. What is it that you're actually doing? Right? Because when you do something over and over and over again, it kind of like, again, your brain develops around it. And like doing that task will generate norepinephrine and it can kind of help your mental well-being. And it can be one of those things that's like, if you're really stressed and like you're stuck, then you go and you do that activity, you get the norepinephrine, that gets the brain working again, and then you can go and do the thing that you were struggling with. So if I'm a programmer, at its most basic level, what I'm doing is editing text. I'm typing on a keyboard. That's what programming is at its most basic level. So I've kind of, with that in mind, started to like shift the way that I do things to optimize towards that. Like I want to stay, when I'm working, I want to keep my hands on the keyboard as much as possible, because that typing gives me the norepinephrine and can help me get into that kind of like flow state. As soon as I have to take my hand off and put it on a mouse, then you're losing it, right? So I try and stay on the keyboard, right? You think about, because this is going to be the things that like when you're an old person, when you're like 70, 80 years old, what are you going to do to occupy your time? What are going to be the activities? You know, and like old people, they got their things. They're like knitting and things like that. What are you going to do when you're in the old folks' home? Because I'll tell you what most people do, right? Look, they're like this. This is the activity that most people spend their day doing, right? Swiping on their phone. Scrolling on their phone. Is that what you want to be? I don't think so. I think I want to have you know, activities that are a little bit more enriching than that. Typing is kind of cool. You know, for me, the Olympic weightlifting, you focus on those just 2 lifts. But, you know, I've seen 80-year-olds do Olympic weightlifting. You know, that's something that you can take with you into your old age. I'm kind of wondering if I should take this off at 13. It does seem like we're getting kind of stuck in the mud. I think I will keep it on for a little bit longer because the S&P 500 has not opened up yet, and we usually do get a move sometime between 7:15 and 8 o'clock. ZN just getting destroyed this week. Yes. It is really a jarring change, I think. I mean, look, it was mostly this one move, and this move kind of felt like a little bit of a freak move, but who knows? What do you think that non-farms is going to be? Because in the end, non-farms is probably going to be the real decider, right? Like if non-farms comes out and it's super weak, it wouldn't surprise me to see them come all the way back up to like 110.16, for instance. So the week's not over yet, but I've definitely seen a shift. Like the market participants are thinking about the macroeconomic situation differently for sure. Keeping your mind active in old age is a must, I can attest, because my grandpa is guilty of just letting himself go, and now he pretty much is at the beginning stage of Alzheimer's. Yeah. Well, Alzheimer's itself, I don't know how much that is. It's the way that the mind develops as it gets older is a really fascinating thing, and something that I spend a great deal of time thinking about, because I am starting to get into that age where your brain elasticity starts to go. I think that I do better with it than most, and I think that that's kind of an ADHD thing. Like my understanding is ADHD brains are a little bit more plastic. But you know, like I want to keep that up, doing that kind of mental exercise to do stuff. And a lot of people, when they get older, they don't do anything. They're not doing anything that is like problem solving or challenging themselves or anything. But I'm not sure if that's what causes Alzheimer's. I've heard a lot of stuff lately that suggests to me that Alzheimer's is really just like insulin resistance's effect on the brain. That it has more to do with, you know, like having too much sugar. Holy crap. You say ES is dumping? I don't know. Not yet. They're like right on the edge though, right? Like they're right on the edge of this kind of range that they've been trading all night. If they start to make a move, it's kind of a little concerning to me because they haven't opened yet, right? If the S&P 500 opens up and immediately takes a sell, they're going to be jumping off the cliff right on the open. It's a little scary. But man, that big trade at 12, right? It ticked down. We were like at 13.5, right? It ticked down to 12.5. And then 5K immediately hit 12 and took out the 12. So I'm actually a little bit surprised that the market makers are willing to hold 3,000 contracts there at 11.5, because it kind of looks to me like there's some big guy out there that's going to gobble up any big bid that it can. Clean living, sunlight, wholesome foods. You know what's the other thing that concerns me about getting old? Is like as you get older, you get more allergies, and my allergies are really bad. So like if they're bad now at 40, what are they going to be like when I'm 80? Well, so how do you know that it's market makers holding 3,000? So in my definition of market maker within that context, a market maker is anybody putting out a limit order, right? So I'm surprised that they were willing to put 3,000 limit orders on the best bid, because they were tackling those pretty aggressively. So there was a big iceberg on the offer at 12. It looks like they filled them. So that may actually kind of chill. Maybe things will chill out. So when you see something like that, sometimes you think, okay, if there's a big guy and he's selling it and he's a really engaged seller, the way that they tend to do it, I've found, is they will have an iceberg at like their optimal price, and then they'll be taking market orders down here, because if they wait for it to go and hit their iceberg, like, it might never happen, right? But if their iceberg does get hit and all of their orders on their iceberg get filled, then they're done. So sometimes when there's a big offer on the pressure and they completely fill that, sometimes that's the end of the downside momentum, or at least it's a reprieve. In a situation like this, you got to think there's multiple large players selling, right? But be looking for 2 to 3 attempts higher to short NQ. Yeah, it might be too easy of a trade / setup to just be short on the open and expect them to jump off the cliff, right? Yeah, when you get a momentum-based move on ZN, you can really tell when things are starting to kick off. You'll start seeing like tens of thousands of contracts hitting direct market. Yum. I'm not going to say that it's really easy to tell when it's trending and you just wait for that and get in. That would be like way too easy. But a day where there is real selling in treasury is very different from your usual day. It's even worse when it's a buy. Let me tell you what, man. The craziest stuff that you will see is when the treasury is in panic buy mode. When it's like risk off and everybody panic buys the treasuries, that is some of the most insane order flow that you'll see. I can remember some moves where, you know, they pushed through 20k icebergs on the offer, for instance, and just plowed through them like they were nothing. I would usually want to see inventory build in an opposite direction before taking a setup. I would like to see like a move in the opposite direction just because that gives you a better price. But I kind of feel like that if you're always waiting for that you miss a lot of some of the best moves, you know? Now it's curious, they put a big old 7k down at 12. So, I don't know how suspicious I find that one or not. I'm kind of the mind that if we tick down that 8k, let's round it up and say it's 8k at 12, we'll pull. But, you know, it's still early enough. The situation, I'm going to say it's 50-50, whether that's real or not. Of course, if they do go down and they start trading it, I think there could absolutely be enough market sell orders to take it out. Oh, well, he just canceled it. Uzi thinks it ain't real. Well, just remember, there was 7,800 at 12. So if we trade that again, let's see if it takes more than 8,000 contracts. Sometimes that could be like oh, well, now they're going to be afraid of it. I don't want to show all of that size, so they convert it to an iceberg. That might have been converted to an iceberg. So I would still like keep track of where that price was and pay attention to how much trades there if it trades again. If we tick down and then they clear 12 with less than 1,000 contracts, then I'm definitely gonna be like, okay, playing games, aren't we? Well, they ticked down. Bid is looking a little bit vulnerable, but there is a little bit of an iceberg there. 4,000. Okay, it was fake. It was fake. It was a spoof. So that to me means probably want to hold this for a little while longer. Man. This all has me, reminds me of Monday, right? Just makes me think, man, what is services PMI going to be? Is services PMI going to come out and they're expecting 52.8 and it comes out and it's like 54 or something like that? If services PMI came out and was just as high as the manufacturing PMI was relative to expectations, then yeah, that would justify the puking that we're seeing, and you'd probably see it quite a big leg further. I know, larger picture, we're talking about momentum. So remember, we got to be really careful about momentum. When I refer to momentum, I am talking about a phenomenon that we see in time series on a daily basis, okay, like on a daily time frame. So when I say that we're in momentum, what I mean is that the 50-day moving average is below the 100 and 200-day moving averages, and we have hit new 90-day lows, let's say. Maybe 50, maybe 90-day lows. Okay, so this is the lowest that we've been going back to December. So this move right here definitely qualifies. So we are in momentum short. That's what I mean. And how much have we been? So since this area right here, well, that was 167. Let's round it to 170, and now we're at negative 191. So since this 16 area when I got in, that's been another 20,000 contracts short. Wow. Well, that definitely puts me in the thinking of that PMI is probably a significant factor here. I don't know if I actually want to hold this position into the PMI though, because I'm got a meeting at that time, so we'll be able to read the number out, and then I don't think I'm going to manage it. So, I think I will take it off just there, just for those reasons. Yeah, do it, policy. You know what? If I didn't have something going on, then maybe I would risk it. I mean, it is just a sim trade, right? That was a good one. That one kind of made me wish that. Well, actually, I don't know. How many did I have come against me? I was gonna say it kind of makes me wish that I took it live, but where's my? Here it is. Positions. Oh, it only went one against me. Well, okay. Maybe I should have taken it. At the time, I was still so concerned about the possibility of the sell sputtering out and me getting a pretty strong wave against me. But wasn't a problem this time. Should start trading ZN live? I think I'll keep it over here in the micros. Because I want like a bad loss to not be more than like 5%, right? So if I trade ZN and I got a bad loss, I could probably lose $250 to $500. And if I'm trading a $1,000 account, that's like 50%, right? That's 25 to 50% loss. Whereas in the micros, right, it's only a 2 to 5% loss. You seem to have a good read on ZN. I feel like, yeah, I have a pretty good read. But I think that has a lot to do with the flows. This is the thing that I've always kind of noticed is like, okay, if you come into the market and you just say, I'm going to sell it today. Maybe you did a coin flip. You're going to sell it today. And it happens to be a day where it's momentum short. It almost doesn't matter what you do. You're going to make money, right? But even if you're really, really picky about it and you say, you know, like, was I getting like the most optimal entry and exits and all of those sorts of things? It just seems like it's so much easier to see those sorts of things when you have the larger flow correct, right? Like when you have the larger flow correct, I can kind of see, okay, here's a node. It's kind of pausing. They're building some volume out here. They're going to continue selling. I can try and build a position on the higher end of that range. And then it ends up being just perfect. And you hardly get any flow against you. You can time it right so that you don't have to sit in it forever. Like, but that's only because I'm only able to have like what appears to be such a great read because we're in a situation where the expected flows are relatively predictable, right? I said a mild to medium sell depending on Bostic and Bowman. Well, they did talk, but I didn't really see a whole lot of big headlines off of that. Let me come back to Twitter and just double check. I see more stuff from the ECB than I do from the Fed speakers. So that's why this is so important, especially in treasuries, because treasuries have such a strong tendency to trend. If you're just only catching it when we're in trend days and you're making money when it's trend days, you'd do amazing. That would be amazing trading. You might only trade once a month, but that will be amazing trading. I think, though, for me, I think that I need to work on my courage here. I think part of it is, like, I really like to have, like, a winner under my belt. That kind of feels good, and that helps my decision making a little bit. And then maybe I will, you know, come in and take a tepid live trade. It's just that now, like, I kind of feel like the opportunity's over. But maybe tomorrow or Friday be maybe a little bit better of a situation for me to take a live trade. Actually, not Friday. I think I'm going to avoid Friday because Friday is probably going to be crazy no matter what happens. You got this much trend coming into the treasuries, and then there's a non-farms. It's probably going to do something really bizarre on non-farms day. Been lots of great fundamental conviction with going long in CL recently. Well, now I do not understand that instrument as well, because some of the things that I've been reading, this is going back to what Uzi was talking about earlier. If it's broken out by instruments, okay. So you guys that are oil traders, you tell me what the fundamental situation in the oil market is, because I continue to see some things that say that like the oil market price could be constrained from going much higher because of a lack of demand from here. That's what I keep seeing, but the price keeps going up, right? So obviously it's more complicated than that. Oh, you'd love to? That was where it was coming back to, like, I would love to get more people involved. Every time that we kind of try doing this, it doesn't really turn into anything. But on Discord, we have this live stream stage channel or whatever it's called. So then you get everybody in that channel, and then you can raise your hand and talk, and then everybody on the live stream would be able to hear you, right? Like, that's the way that I'd love to see it done, right? So we have like the council of people, and then we're going through the instruments, and the people that are experts in that particular thing talk about what's going on in that market, and I just kind of am like moderators, lead the discussion, you know, guide the discussion, not lead the discussion. But I don't know, it would need to be a more organized effort, I guess. How much time do we got left? 20 minutes. I kind of wanted this to go and have that meeting over with, and then just want to go. I don't know. I wonder. So I've been. I haven't had a whole lot going on in the evenings and stuff this weekend. Now maybe I'm just a little pensive because of that. Yeah, schedule's been a little bit different this week. Oh yeah, Obsidian says NQ is what we call the Widowmaker. 100%. My mentor John Bottomley we'd talk about that all the time. Nothing kills more retail accounts than NQ, without question. CL is a crazy one. Okay, CL is crazy. CL can just destroy you. I got destroyed by CL last year. I'm still bitter about it because I had the call correctly. I lost money on it, but then after I was done losing money, then it went up and it went in my direction. I don't understand the flows, and I didn't understand the flows in oil strongly enough to be able to time the trade correctly for the right day and all of that sort of stuff, right? So it got chopped up. But man, when she goes, it's just crazy. And oil, I kind of feel like oil fattens you up, you know? I'll tell you a story. Don't stop me if you've heard this story before, okay? But the story is called Hansel and Gretel. So once upon a time, there was a boy and his sister, Hansel and Gretel, and a witch came and killed their parents and started, wanted to eat the children, started chasing them. So the kids run away into the woods, and so they are living in the woods for a few days alone. And then they come across a gingerbread house. Now, Hansel and Gretel are a little bit suspicious of this gingerbread house, right? Because who builds a gingerbread house? And they're being chased by a witch. Okay, so kind of sus, right? But it's been a few days. They're very, very hungry. So Hansel decides, I'll tell you what, I will eat just a little bit of the gingerbread house to test it. And if I live, then we know that it's safe to eat, right? So he eats a little bit of it. They're okay. So the next day they both go, okay, I think it's okay. So as time goes on, they eat more and more of the gingerbread house. And they live in this gingerbread house for quite some time, several years, like 2 years. They live in this gingerbread house all by themselves, and they get fat. I mean, they get big. They get really big, right? And then just one day, they both die. They just kill over. Now, by that point, you know, maybe they have like friends coming over, eating the gingerbread house, all this and that. They see that Hansel and Gretel died, but like nobody else dies. So it couldn't have been like, did the witch come in and like poison the gingerbread house that night and they just didn't notice? Or did he die from something else? Like, how do you know? And so all of the kids, they just continue eating it. But the truth is that the gingerbread house was always poisoned from the very first day. It's just that it took 2 years for the effects to kill you. Market does this to you, folks. Market does this to you. They will fatten you up. They will come in and they'll say, oh, look, you're such a great trader. Look, you got this trade and you got this trade and you do really, really, really well. But what you're doing is actually kind of risky and stupid. And eventually, and sometimes it only happens after 2 years, it'll just come and destroy you. They fatten you up, and then that's liquidity for them to take on some move where you don't understand what's going on. Yes, services PMI in line 51.7 versus 51.7. There was some volatility around that, though. We did go lower. I got out at 12, so there was probably 2 more ticks than that. 100%. And I don't know why this is. It's just been my experience that oil is the one that is the most likely to do that to you, to fatten you up and then turn around and just absolutely destroy you. Because I remember when I first started trading, I was interested in oil, and I did oil. And like the first time I did it, it was great. I made $1,000 and I'm like, oh, I'm so great at this. And then every day after that, I'd lose like $3,000 trying to scalp every time. Not live money. It was sim, but right. I also remember this one day, my wife was like, okay, let me try this. And so she trades oil. I just tell her what to do. Right. I just tell her how to input orders in. Right. And she's trading on the DOM in oil. And she just goes, okay, so like when it's at the bottom end of this range, I'll buy it. And when it's at the top end of this range, I'll sell. And I didn't tell her to do that. She just decided to do it. And she scalped that range and made like $1,000 or $2,000 on sim that day. And just looked like an absolute genius trader. Then the next day, she didn't ever try it again after that. But then the next day was like a insane trend day. And if she had continued doing what she was doing, she would have gotten destroyed. But it seemed oil has that tendency to do that to you. Like you'll do really well at the beginning and then it turns around and she starts slashing your tires and keying your car. They're still going, man. They are still going. The S&P 500 is up though. So I guess Obsidian is getting his setup, huh? Oregon has rolled back Measure 110 that made it legal to own and hard drugs. Shockingly, overdose and addicts was skyrocketing up. Weird, right? You know what is funny about that? Is that nobody, like you see the online discussions about it. You look at the people that are far left. None of them sit down and say, you know what? Maybe this decriminalization thing was a bad idea. None of them will say that. What they'll say is, well, the reason it's a problem is because we're not doing it everywhere. If we were doing that everywhere in the United States, then maybe it would work. As I was saying earlier, right? Like, if you're training your mind on only one thing, then when it runs into the contradiction, your brain doesn't know how to deal with it. So it just doubles down. And you've basically trained your brain, and your brain has grown in a way that it will not adjust to the current situation. It will double down on what it thinks it knows. I am quite surprised how far they have come down here since that news. I really am. I thought that you know, the lowest maybe we would go before the top of the hour would be 11. But you know what? That's what always I don't know why it always catches me, but when we're having momentum, it always goes further than we expect, doesn't it? It always goes further than you expect. I was kind of really hoping in people's ability to, you know, not do drugs even if they are legal. I think that the problem in people's thinking around these kinds of issues, and you know, this isn't explicitly related. I mean, it's more a political issue, but I'm going to try and relate it to trading maybe, perhaps, right? So, sometimes there are decisions that aren't necessarily about what is right or wrong or best or optimal, right? So, like, if we're trying to take this from like some sort of moral framework, like doing drugs is bad, okay, but forcing people to not do drugs is also bad, right? Like taking away people's freedom of choice is a bad thing, but having a lot of people doing drugs is also a bad thing. So what do you do? Well, there's kind of this whole thing where it's like, okay, at what point does the damage done from the people doing the drug is, you know, more important than the, you know, giving people the freedom to choose, right? And there's kind of this crossover. So the way that society is going right now, and it kind of seems like what people are kind of zeroing in on is that the effect of marijuana isn't harmful enough for us to justify involving the government in it, but doing fentanyl and cocaine are, right? That's kind of where people are coming onto. It has to do with, you know, how much damage actually gets done, right? And I think that you kind of have to make similar choices in trading sometimes too. Like, it's the longer you can hold on to a position, the better, right? But you don't want to have the trade come all the way back on you. So, like, at what point is the damage done on your position completely retracing on you, you know, so bad that it makes sense for you to get out, even though it might go a little bit further, right? There's not necessarily a clear answer, but you kind of just have to, and, you know, it's not necessarily the answer that you would like to have based on, you know, some sort of, you know, understanding of the world that like has these strict rules that were created by God and everything was meant to be a certain way or something like that. It's reality is often much more fuzzy than that. And that's going to be a difficult thing for the US electorate to deal with. Right? Okay, Obsidian did post the comment here. So currently at the moment we have OPEC maintaining their oil output reductions, less supply. True. Growth in both US and Chinese manufacturing sectors. Largest oil consumers and largest oil consuming sector signals more demand for oil. That's true as well. Although, you know, we kind of have that trajectory. My understanding is like, okay, it's grown, but then like that's it. Like that we haven't grown enough to sustain higher prices than 85. But let me continue reading. Largest oil consumers and largest oil consuming sectors are more demand for oil. Drone attacks on Russia key oil refineries, putting a panic on their output, which means less supply. And for some reason, Israel attacked an Iran embassy in Syria, sparking an expansion of Israel. Small war risk premium being factored in since Iran is a major oil producer. Okay, so do you think... Well, I'll type it here in Discord. So, do you think that how much of the extension into the 80s do you think is due to what do we call this? Global conflict risk premium. When Uzi said everything, I don't remember what he was referring to anymore. Okay, I'm gonna come in here because I really don't want to forget. I'm gonna join this meeting over here. We'll keep going. I'll just have it open. No, that's not it. Where is it? Oh, did they move it? I'll confirm. Maybe we moved it. Maybe I don't have to worry about it. That'd be nice. Oh, what is this? Oh, okay. Obsidian. Well, all the news mentioned was released all this week, so I think everything we've seen so far this week is factoring all of this information in at the moment. Okay, so starting from here. So we're possibly saying that this is like supply and demand changes, and this is risk premium on top of that. Or at least this is more risk premium and this is, you're right. How they actually split up maybe is unclear, but maybe. Because my bigger thing is that I'm just not sure I can buy oil at 85 and then hold it for 6 months and be up on the position, you know? We have BZ up almost $90, so there could be still room for CL to go higher. Yeah, that's about right. That small circle has been largely due to what I've mentioned. Okay. All right, we got 15 seconds. Here we go. It's gonna laugh if this like plunges again. Nope, the other way. Whoa, 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 okay. 51 spot 4 versus 52 spot 8, and prices paid was 53 spot 4 versus an expected 58 spot 4. You know what? Since I guess I don't have a meeting, damn, no fills. Should have put that one on there earlier. It's okay. I have one contract. That had a big impact. Yes, it did. I think this. So here's the thing, is that the reason why we got slammed down so hard on Monday was because the manufacturing PMI numbers, the prices paid in particular, were a lot hotter than expected. But what's happening now is the services number is showing the opposite. The services number is saying inflation is cooling down. So that could probably retrace a lot. I you know, we might see a complete shift of the momentum. Watch this 24. If we get up to 24, is there resistance there, or do they just cut through it? My guess is that if we get that much buying today, that they will just slice right through it, because maybe a lot of the guys that were, you know, short on the treasuries here might be rethinking their positions right now. And the thing is that our volume on the day is so much short. You could get really strong short covering here. I mean, look at all of these orders that I put down in here that didn't get filled. Right? So So we might get a little bit pullback. I wouldn't even surprise me to see these orders at 16.5 get filled eventually, but so I might have to take on a lot of risk to pull this off, but I think I'm willing to do it here with some sim. I'll keep it below 5. Okay. Everyone short on the bond is having a grand old time right now. Yeah. So far, they're kind of holding the line. I'm a little suspicious of that order at 19.5, but like all of a sudden there's this liquidity has come in and is keeping us in this range here. Now, we got to be careful on this one because those headline numbers, there's also like a report to read. And sometimes there's things inside of the report that kind of give people a better idea of like, you know, how concerned are we about prices continuing to rise or not? I think that the prices rising in manufacturing is probably more concerning than the prices cooling off in services is comforting. So, but I do think, you know, this was a pretty good down move, right? They completely retraced that down move and are now pushing the highs. I'd say that's pretty significant. And, you're definitely going to have a lot of people. And I mean, like, we're talking like 30, 40, 50,000 contracts maybe underwater here today now. So if this really starts to push the offers here, this could go off like a rocket ship, man. Bitcoin is taking off here. That's interesting. And it was right off of the news. Jeez. The S&P 500 really jumped 20 points off of that. Wow. So like when we come over and look at the volume profile now. So on ZN, it's just a retracement of today's move so far. That's where I'm like, I really think that you could get above yesterday's high, possibly. We'll see. We'll see what the volume they have. But look at the E-mini. Ooh. Well, they cleared through the single prints at least. Services PMI reverses market bloodletting. What do you think? Do you think that I have maybe bloodletting? I don't know if YouTube will like that. Reverses market losses. There you go. Is that safe enough for you, YouTube? Too bad these didn't get filled on the initial move, right? Let's see here. Send a visualization of the data report for you to... What's this? Oh, right. You're just showing me the charts and stuff. Yeah. I like to pull those up on Forex Factory. But I use Financial Juice to get the numbers. Okay. Starting to look like a sell the move? Maybe. I'm still of the mind that, let's see here, 1, 2, 3, 4, 5, 6. Probably should do one more. I'll do it right there. I do think you had a pretty big liquidity hole here. You know, like all of these orders right through here didn't get filled. There was 4K is selling through it though. That's pretty significant. And the offer at 17 and 17.5 looks a little thick. I'm still slightly suspicious of those big orders, but I guess we'll see what happens. It's a tough call because this is one. So I think there's one scenario where we could say that the market made a reasonable move based on the news, and that's all there is. And I think that there's another scenario where we say that it should continue to trend up all day. So I'm doing something super risky here. We'll see if it works. Doing something super risky. We'll see if it works. Because the whole thing is like, I got limit orders, they weren't getting filled, and now they're getting filled. That concerns me a little bit. Because if it was really that good of a trade, it would be hard. It would still be hard to get filled. UK's Financial Conduct Authority has confirmed that social media influencers turned finfluencers, when they focus on financial topics, fall within new advertising regulations, even those who are not being paid by a firm but who are promoting a firm's services in hopes of future compensation, or those who are promoting services in hopes of attracting social media engagement, could be subject to the new guidance if they are deemed to be acting in the course of business. The FCA was explicit that the kind of memes prevalent within the cryptosphere fall under their remit and have to be clear and not misleading. Okay. Oh man, that comment where I told you about earlier, where I was like, why does Reddit hate ICT? ICT, let me present Exhibit A. You, OP, burned out after years of trying and yet still a true believer. Yeah, that's got 41 upvotes now. And that's like overnight, too. That's pretty crazy. That's probably one of my more upvoted posts in the day trading subreddit, at least. Okay, so we are getting a bit of a liquidity hole at 16.5, so I like that. So I like that I did get an order at 16. Right. The liquidity on the offer has chilled out a little bit. Still pretty thick above us, though. So, well, one of the things I have a hard time adjusting to is that on Reddit, you're not allowed to use certain words, which I will not use here on YouTube either. So instead, everybody on the Wall Street bets have resorted to calling it regarded. And now it's leaking outside. So here on the day trading subreddit, are crypto futures regarded? Yes, they are regarded. I think so. I think some of them are regarded. Maybe not CME futures.
Block sell.
Oh, I don't like that. I don't like that sound. 3,000, 16, 1,000 bought at 16 at 1.2. 2,000, 16 doesn't clear. Iceberg 6,000. 7,000. 7,600 clears. Decent offer. Good pulling. Ouch. Okay. A little bit of fight. A little bit of fight, though. Looks like they exhausted the buyer, but now we'll see if the more selling comes through or what happens. Well, I tell you what I'm going to try and do. I'm going to try and hold this until our session ends. And if it's a big loss, then it's a big loss. It's okay. That's a sim. But I think that this should still be going up in the end. I don't like seeing that big old offer at 16 either. Ouch. Intel discloses $7 billion operating loss for chip making unit? Really? That deserves more investigation. Oof. Yeah, that's not good. If we could get Intel back to like 36, that would be great. I need to recenter. I might just have this whole thing wrong, guys. Okay, following the mixed picture on manufacturing PMIs but strong impulse in prices in both surveys, today's services PMI offered no more clarity at all. Services PMI printed 51.7 final for March, but down from February's 52.3. That's the lowest services print since December. Services PMI disappointed, printing 51.4 in March from 52.6. So both weak at the headline level, which fits with the recent weakness in soft survey data. Chris Williamson says U.S. service sector reported a further rise in business activity in March, adding to signs that the economy enjoyed robust growth in the first quarter. Combined with an acceleration of growth in the manufacturing sector, the latest services PMI data points to GDP having risen at an approximate 2% annualized rate in the first 3 months of the year. Confidence in the outlook for the coming year has also lifted higher, which should help sustain solid growth in the second quarter. But there is a major problem looming for Powell and his Powells. The sustained upturn is being accompanied by renewed upward price pressures, however, with wage growth in particular driving costs higher. Rising raw material and fuel prices are also adding to cost burdens, which is in turn driving average selling prices for goods and services higher at a rate not seen since July of last year. Both manufacturers and services providers alike are seeing intensifying costs and selling price inflation rates, which is likely to feed through to higher consumer price inflation in the near term. That surge in prices fits with the recent resurgent trajectory for wage growth, but as always, the data is there to baffle you with BS. The ISM services prices paid print plunged to 53.4, the lowest since March of 2020. So, take your pick. Either services prices are rising at the fastest rate since July, which is what S&P Global says, or they are rising at the slowest pace since March of 2020, which is what ISM says. No, I don't think so. I think that there has been, in the last month, services prices have slowed down because ISM is a more recent measure than the S&P Global one is by about a month. Does this sound like prices are plunging? Continued inflationary pressures across multiple clinical device categories as contracts expire or are renewed. Public opinion on the value of higher education compared to cost is having an impact on our enrollment. Oh, and if prices are plunging, why are barely any of the components down in price? And then there's manufacturing prices, which ISM sees rising. Okay, so Zero Hedge is questioning the ISM number. Perhaps could be cause for for this just not taking off like a rocket, right? I think that this report still should give us caution that, this is not necessarily just going to go down and down and down, and we're going to have rate hikes. It's still uncertain. There's still more data points for us to pull out, for us to find out. So while I'm at it here, we got about 40 minutes left. Let's come in and take a look at our watch lists and see where things are at. Silver up 6.91% today. Wow. Okay, yeah, my silver is doing well. Rare earth resources still in the 20 cents range. The WAC up again today, 49.95. Oh, DWAC is still listed? No, that's not it. It should be DJT. Okay, wow. That's not actually that big of a jump. Okay. Let's add ticker DJT. Add that one on here. And remove security back. Okay. Magnificent 7, Meta doing the best, followed by Nvidia. Nothing too crazy there. Wow, Energy Fuels Incorporated, UU is doing pretty good. So is uranium turning hot again? UU. No, it's a stock. There we go. Ooh, yeah. Ooh, I like that curve. I like that curve. Doesn't mean anything about the future, but I like to see that curve. That's the only one on that group really doing well though. New scale. Let's check out SMR here. Looks like SMR is kind of chilled out. Oh yeah. So if we wanted to buy it, you know, now that the crazy is over, maybe this would be an okay place to buy. DocuSign is also chilled out, looks like. New York Community Bank doing okay today. Intel down 6% today. So I would like to buy Intel at some point, but probably not today. Probably wait a month or two. Kind of like, because I think you could get a little bit more downside momentum in Intel. Let's not say downside momentum, but some downside short-term movement. Oh, that's Walgreens. Yes, that's right. 2%. Okay. Where's evil? Where's the evil ones? Defensive's not doing too well today. Evil companies. Oh, most of them are down. Let's see here. But only down by a little bit. I'm reading that it sounds like Disney will survive the proxy fights. I saw Elon Musk kind of trying to put his weight behind the upstarts. You know what I've found with this sort of a thing? I don't know how this works when proxy fights, but you know, often in politics, if you want to do something, like for instance, I lived in a place where we were an unincorporated area and we wanted to become a city. And the first time that we voted on it, the people said no. And then the second time that we voted on it, people overwhelmingly said yes. Now, part of that was that the county decided to tax us heavier in that time period, but sometimes it takes multiple tries. And so I wonder, you know, we have a proxy fight now, if they try again next quarter. And then they're more, you know, and Disney continues to stumble, and then the proxy fight is a lot more successful. Could happen. Who's up? Bayer. Okay. Well, but nothing too terribly interesting on our watch list today. And Treasury, very much stuck at 15.5. Kind of starting to think that if this trade does work out, that I will have to wait until long after the stream. Which is kind of not fun, but yeah. Yeah. Some of the big offers have kind of disappeared, at least. Okay, so here comes oil stocks. It's build a higher than forecast. Kind of mixed. Gas was a draw of 4.25 million. So that's a pretty big change on versus the forecast. But the inventories is a build. 3.21 billion versus negative 1 million. So I don't know how they sort that one out. So far, oil looks like it's selling a little bit, but nothing too crazy. Oh, I opened up this tab because I was going to say something to somebody and I totally spaced what I was doing. In NinjaTrader, if you go to their website and you log in, there is a spot where you can download the desktop app. It's in there somewhere. The desktop app is still a thing. I love this song, so calming. It reminds me of that kind of South American wave music with the flutes and stuff like that, but super poppy. My ADHD said, see you later. Hey, that's a good two upticks there. I'm liking it. So we're not in the money yet, but we are we were absorbing all the way to 16, so I would like it to stay above 16. If we could get back up to 18, that would be great. I'd be super happy. I'll be taking a big win, even though it's well, yeah, but it did go 4 ticks against you, but hey, I'll take it. What I'm doing is a little dangerous, though. I don't think I would do this with my live account. No, I don't think I'd do this with my live account. Let's read about Disney here. Walt Disney Co. and Chief Executive Officer Bob Iger are set to defeat Nelson Peltz's Trian Fund Management in a multi-month proxy battle, Bloomberg reports, citing people with knowledge of the matter. Enough votes had been cast as of Tuesday evening, including ones from Vanguard Group, BlackRock Incorporated, Rowe Price, Norges Bank Investment Management, Value Act Capital, and retail investors to prevent Trian Peltz and former Disney Chief Financial Officer Jay Rasulo from joining the company's board. Trian had pushed for changes to management and strategy at the DEI-driven entertainment company to improve years of terrible performance. Just last year, the company suffered a series of movie flops, as one South Park episode explained very accurately that the woke mind virus is destroying the company's content. And then they have the link to the South Park video where Cartman says, put a chick in it and make her gay. Beltz has said Disney is stupid because I'm not trying to fire Bob Iger. I want to help him, he added. We don't fire CEOs. Really? Because I kind of think that you need to fire Bob Iger. Maybe that's why your proxy fight's not winning. Not go far enough. That would be the liberal take on it, right? You weren't extreme enough. That's why it didn't work. I wanted to ask if it's just sim. That happened a lot lately. Are you mentalist? I am, Yo, I don't know what that even means, but I think that I'm still a little bit, what is the word, shell shocked from the losses that I took in January. I'm still being very tepid with my live account. I took a trade earlier today that was 10 ticks, and that was only on 2 contracts. And 1 contract I took it a tick, and then I got 8 on the rest of it or whatever. So that was a good trade. So then I came around and I liked what I saw on the news, and I tried taking it, and that one's not really going for me. That kind of hurts my confidence a little bit. Also, I don't like what is appearing to be a false breakout here. It broke out and it fell back in, and now they're putting the big offer on it again. Does appear that the thing that got me into this trade is maybe a little bit more iffy than we thought. Like, I saw those PMI numbers and I'm like, oh yeah, you'll buy this. The initial reaction made sense. A lot of people are questioning that number. So, maybe it settles in somewhere around here. I kind of still feel like I should be able to hold it and get some of these fills up here, though. So, I'm not quite sure what to do about it. Part of me wants to just bail right here and give up on it. I'm getting the feeling sellers are accumulating positions in this sideways action, especially ES. I don't know about that. I mean, so in the 10-year treasury, let me try and give you my order flow analysis here, okay? First in ES, okay? So we're looking at cumulative delta. Since the news, pretty clear action to the long side. Okay, pretty clear that the imbalance of the market orders is long. In ZN, it's a little bit kind of fuzzy. Like, here's the news. We got that big jump. It came back, and now since then, kind of sideways. It's like they took their trades, and now that they've got that news, it looks to me like the big players aren't jumping on. So, like, retail traders, we jumped in. Well, maybe not retail traders, but like the news traders, we speculated and went long on this, and then a good portion of them, if not the majority of them, took profits. And then since then, nobody's really been doing anything. And I kind of expected that maybe some larger macro traders would then pick it up and take us back up to those highs, and it hasn't happened yet. Maybe we just need to be more patient, but so far it hasn't been happening. Hasn't been 45 minutes since the news yet, though, so I think the liquidity is still recovering somewhat. And then when I look at the spreads, well, we did steepen. Well, we steepened before the move, and we've maintained that steepener. But the flows are still a little bit iffy across the board. So that's what I think is happening. So I don't think that I could confidently say that, like, somebody is absorbing positions. That's one of those things where it's, again, if you come in and you already have a bias, then you might see that sort of a thing and you'll say that because, like, what's the difference between market orders are being really, really aggressive here and they're trading a lot versus limit orders are really holding and are accumulating positions, right? That just kind of depends on your perspective of it. And that happens a lot in order flow where you can actually see the setup from both sides, right? And the thing that ends up being predictive, I guess, if you could say that, is like knowledge of the larger flows. But what I'm looking at right here kind of says to me that the trade that I wanted here is not happening, that it's just dying out. Now, later flows might still save me, but it's not looking very good for me right now, is it? So I'm glad that I stuck the sim today. I think that I need a little bit more confidence before I really start taking big trades on my live account again. I had some wins, but it's still... And you know, I might also want to just sit out this volatility of this week because I kind of suspect that non-farms will be really confusing in particular. Non-farms in particular. Oops. I accidentally closed the tab here. I'm going a little bit of my delta analysis here. So, but since the news, it kind of looks like the flows have kind of died out. So we'll see if another flow comes in or not. We've still got time that we could see in the next 20 minutes. We could see a flow long. I wish that the Disney proxy fight was like a bigger thing. Like I really want to see a proxy fight that really plays out in the public eye, you know, like one where everyday people are buying shares of the company so that they can vote on that proxy fight. I think that would have a positive cultural impact on the market. Because I want to see people... I think one of the biggest problems with public companies today is that the public isn't really involved in them. And I would really like to see the public take public companies back. You know, and how do you have that happen? Well, I think that you'd have one proxy fight that just became a real... Yeah, everybody became really laser focused on and wanted to participate in, and then it would forever be in people's mind and they would start participating more. And maybe perhaps reform corporate law a little bit too, so that the public has a bit stronger of a say. Okay, well, we did tick up, and they got a pretty good iceberg that's held at 16 so far. They've traded 5,000 contracts into it. There's 3,000 more in liquidity on it. That's looking good. I do think that if we trade up, that there's going to be a decent amount of liquidity that they're going to have to eat through. But we are still in this situation. Like if they were to breach a new high today, okay, tick up. If they breached a new high today, I think that you would see some ugly stops up here. Because again, there are a lot of shorts underwater today in the treasuries. But they actually have the volume to get to the point where they would start triggering that? I don't know. Because it kind of looks to me like maybe the sellers doubled down. You know? Who knows? It could be that maybe somebody that did absorb long here and they're just taking profits, but there'd be no way for me to be able to see that. That was an interesting political story here on r/politics. Donald Trump suffers major drop in Gen Z support. Well, it's from Newsweek. I've found them to have a liberal bias and that they are kind of like on the team and that their analysis can be a little bit suspect. But I've seen other stories in the last 24 hours from the conservative side saying that Joe Biden is losing support amongst Gen Z. So let's read their thing. Let's see if they got numbers to back up what they're saying. Hey, look, we got a fill at 18. Oh, that is so great. Okay, now if we can get the 18.5. Come on. Yeah. All right. And that brings our average down to 17. Lovely. I feel a lot better about this trade right now. They may both be losing support. I think you might be right, Vig. Maybe you're right. Maybe Gen Z is just becoming disillusioned with politics and stops participating. Okay. Trump saw his lowest support among voters aged 18 to 24 in Harvard Cap's Harris March poll. Okay, that's a poll that is slightly Democrat favored, but I say is generally a pretty okay poll. Should we go to Harvard Caps? Let's go to their polling. Let's see here. It's 538 pollster ratings. Did they show up? Well, Harvard University has a poll score of negative 0.4, but no rating. Who was the other one? Harris. There we go. They're a 2.5 star. So not super strong, but okay. I'm gonna say that that's a decent enough poll. Anyways, only 35% of Gen Z voters said they would vote for the former president in a Trump-Biden rematch in February. 55% of 18 to 24-year-olds said they would vote for Trump over Biden, an increase from January's 43% and December's 48%. At the same time, overall support for the former president across all age groups has remained between 47 and 48% from December through March. Before December's polling, the Harvard Cap's Harris poll designated the nation's youngest voters as those 18 to 34, which included some millennial voters. Still, support for Trump when faced against Biden remains steady in the low 40s, dipping under that threshold only twice to 38% in September and 39% in July. There's been considerable discussion about how well Trump is doing among younger voters. Patrick Fisher, the author of The Generational Gap in American Politics, told Newsweek that 35% who supported him in March is much more in line with what you would expect. Young voters have been credited with helping Biden win the last presidential election, and the group has been a stalwart voting bloc for the Democrat Party, but dwindling support among Gen Z Americans has been a major obstacle to the president's re-election campaign. That decline in support, compounded with recent gains made by Trump, has caused Democrats to worry about what this could mean for November's election. Okay, so they're talking about exactly what I was referring to. That's cool. Several polls have shown Trump closing in on Biden's lead with young voters. Last month, Bloomberg Concert poll found Trump leading Biden by 7 points among 18 to 34-year-olds in swing states. Yes, and this Harris poll doesn't really tell us anything about Biden's numbers, at least not yet. Even in polls where Biden has the advantage with the Gen Z vote, his lead is sizably smaller than it was 4 years ago. Not only was Trump's support among Gen Zers falling, but the president himself saw an overall increase in support among all voters. That the president meaning Joe Biden. Support for Joe Biden hovered around 41 to 42%, but in March, 44% of voters said they'd back him over Trump. You know, I'd actually, since October, I'm actually quite shocked to see Biden's numbers are improving a little bit since October. I would have thought that they would be at their lows in the first quarter of this year. Maybe recover after this, but very interesting. I'm still at +5. I kind of wish that I wasn't that high, because I would totally take it again at 17. But okay, well, what does r/politics think about this? Probably a lot of stupid stuff, huh? That he had that much support from Gen Z is surprising. Actually, I would agree. There goes Baron. Ha 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 ha. That's so funny. Yeah, this guy says it wouldn't surprise me if Gen Z voters taking part in these polls were trolling the pollsters, because, like, it's crazy that at February it was 55%, and I kind of agree. I can't imagine Trump being 55% among Gen Z. That would absolutely blow my mind. Yeah, alternate, more accurate headline. New poll has different sampling biases than old poll, gets completely different result. Although it's nice not seeing the word Biden in such a headline after a summer of clickbait headline. But is there anything in the actual makeup of the poll that's concerning to us? Newsweek is garbage. Yeah, it is from Newsweek. I pointed that out. So why is James Carville so worried about the young male voters leaving the Democrat Party in droves? I think that is the thing. Like, if Trump was at 55% among Gen Z, and that was actually a real reflection of the reality, then it would almost certainly have to be from young male voters. At my college guys and people I know in my age sort of all went borderline Republican / conservative in Canada. Well, in Canada, it's a very different situation, because first of all, conservative in Canada is still pretty liberal for the United States. It's kind of conservative in Canada is like mainstream establishment Republican in the United States, right? So that's the first thing. But then the second thing is that Trudeau has just been so terrible that it just, I think that they just want to get rid of Trudeau. He's been a terrible president. It was quite shocking to me when he narrowly won last time around, but there's no way now. It's sorry, what is the new guy's name? It's a French name. I remember that. Anyways, the conservative leader, he's going to be the next Prime Minister of Canada. I'm almost certain of it. Pepe? No, it's not Pepe. You're gonna make me do a Google search. Poliv. It looks like it's spelt Poliver, but it's Pierre Poliv is the conservative leader. It is looking increasingly likely he will be the next Canadian Prime Minister. Yeah. And he seems like a smart guy, man. So the thing is it's not enough for me, I don't just want like a conservative in office or a liberal in office or anything like that. I want somebody that I think will be effective in office too, which requires a lot of different skills that are very difficult to find, because you need to have somebody that has the political instincts, can actually get people on his side and build political momentum enough to make changes, but that also has the smarts to make the right decisions. And you don't get that very often, especially not with a Republican, right? I think you kind of had that a little bit with Bill Clinton, which is I think took the country the wrong way, but he knew how to run government effectively and was effective with it. And he had that personality that kind of attracted people to him, right? Donald Trump has the magnetic personality, but I don't know if he understands policy well enough to actually be effective. That's kind of always we hoped that he would be like a technocratic guy, like he would just be the figurehead and all of the Republicans underneath of him would do all of the work and it would work out. Okay, right? But it didn't really work like that because he had a hard time actually finding those people. So well, I want to stick around and see how this goes, but maybe I'll put something in Discord if anything interesting happens, but I've got to get going. So I tell you what, there's still tomorrow we've got initial jobless claims, and then on Friday we got non-farms. And it's been a pretty active week for the treasuries. This is some of the most interesting trade we've had in a while. Today was a little bit of a wild ride, a little bit more difficult, but still some good potential to have made money in it, especially on that downside. So come back tomorrow. I think we'll have some good trading. See you guys then. In the meantime, stay excellent.